Hello everyone. Welcome back. Today, we've got some crucial news you don't want to miss. Let's dive right into the top financial headlines and break down what's happening. Bloomberg's latest report, what Wall Street's expecting for 2025. Bloomberg just dropped a major report that's got everyone buzzing. They surveyed 50 of the world's top financial institutions to get their take on the 15 biggest questions investors are asking about 2025. It's by far the most detailed analysis we've seen for the global capital markets heading into the new year, and if you're following this channel, you'll definitely want to check it out. If you don't have a Bloomberg subscription but you're into investing or finance, this is definitely one to take notes on. And even if you're not into the world of finance, this report gives you insight into how some of the best financial minds are seeing the market environment, which is super useful for understanding what's going on globally. Some of you might say, I'm not really into investing or personal finance, but trust me, this report has valuable takeaways that are worth your attention, even if you're not a financial expert. 1. What will the global economy look like with Trump's America First and tariff policies? Bloomberg kicked things off by asking how Trump's second term and his plans to implement wide-reaching tariffs will affect the global economy. The general consensus from the 50 financial institutions is that while the US government's new policies are unpredictable, they don't think the global economy is going to be unstable. Most are cautiously optimistic. I picked out Bank of America's response to break it down. They described the global economy in 2025 as entering a Goldilocks phase. If you're new to this term, in macroeconomics, Goldilocks means a comfortable economy, neither too hot nor too cold, just right. Bank of America predicts global GDP growth will be around 3.25%, with inflation averaging 2.5%. They also see the world's major economies leaning on loose monetary policies and big fiscal deficits. For the US, they predict the dollar will weaken by 2 to 3% by the end of 2025, oil prices will drop 20%, and gold prices will skyrocket to $3,000 per ounce. 2. What impact will Trump's aggressive economic policies have on the US and global economies? Bloomberg's next question was about the impact of Trump's economic policies. Deutsche Bank, Europe's biggest investment bank, sees potential for faster economic growth in the US in 2025, thanks to expected tax cuts, deregulation, and more supportive financial conditions. They've raised their GDP growth forecast for the US to 2.5%, up from their previous estimate of 2.2%. As for China, Deutsche Bank thinks their economy will pick up due to recent expansionary policies, with China's GDP growing by 4.8% in 2025. However, when it comes to Europe, Deutsche Bank sees a negative impact from Trump's policies. While they might push Europe to take more aggressive policy action, they predict Europe's GDP will grow only 0.8% in 2025, compared to the US's 2.5%. It's a serious issue, and it's clear that the economic gap between Europe and the US continues to widen after the 2008 financial crisis. 3. How will inflation be affected by Trump's policies? Given Trump's proposed tax cuts and tariffs, inflation is another key concern. A lot of experts initially thought his policies would push inflation higher, but Bloomberg's survey shows that financial institutions are cooling off on that expectation. Citigroup's take? They think tariffs, extended tax cuts from 2017, and deregulation could lead to moderate inflation in the US. While inflation may rise a bit, they believe it won't have much of an impact on US economic growth. Vanguard, another major player in the investment world, agrees that inflation will stay at 2.5% or higher for most of 2025, but they don't expect it to climb drastically. 4. What will the Fed do with interest rates? There's a big debate over whether the Fed will lower interest rates, and if so, by how much. According to Bloomberg's survey, most financial firms expect the Fed to cut rates 3 to 4 times in 2025, higher than what Jerome Powell has said, which is 2 cuts. It's an ongoing tug-of-war between Wall Street and the Federation. Wall Street's pushing for deeper cuts to help the economy, and this survey shows that they're not backing down from that call. 5. What's the deal with fiscal policy? Financial institutions also expect governments to push for expansionary fiscal policies in 2025. But a noteworthy twist, Trump might scale back some of Biden's massive fiscal stimulus plans. Some analysts think that under Trump, the government will dial down on fiscal expansion. This is something that hasn't gotten much attention but could play a key role in shaping the economy. 6. What about tariffs and trade wars? We've covered tariffs a lot already, but it's important to highlight how they could hurt global trade and economic growth. Citi warns that if tariffs keep rising, especially if we see 10% tariffs on a broad range of goods and 60% tariffs on China, it could create even bigger problems. JP Morgan agrees, noting that tariffs could be one of the biggest risks to global growth. 7. What's the outlook for the US stock market? While experts predict that the US stock market won't see the same explosive gains as it did in 2024, they're still optimistic. Most think the S&P 500 will grow by about 10 to 15% in 2025, half the growth seen in 2024, but still a solid performance. 8. What's the forecast for bonds? The bond market is less clear-cut. Analysts are predicting more volatility and uncertainty in the bond market, meaning bigger swings in interest rates. So, while bonds are still considered a safe bet, they might not be as stable as in previous years. 9. Credit of bonds. 10. What's happening with commodities? Commodity prices are expected to continue their fluctuations. Gold, in particular, is expected to perform well, with analysts predicting prices will rise to $3,000 an ounce. Meanwhile, oil prices are expected to drop 20%, which will have a major impact on international markets. 11. What about the dollar? The dollar is expected to remain strong, but analysts are predicting that it could peak in the first quarter of 2025 and then start to soften. Bank of America sees the US dollar index reaching its peak in Q1, with the yen and yuan both weakening against the dollar. JP Morgan also sees the yuan weakening, with predictions that it could drop to 7.4 by Q1 and 7.5 by Q2. 12. New IPOs. What's the outlook? Expect 2025 to be a big year for IPOs. Many experts predict a surge in companies going public, which could signal an active investment period ahead. 13. Asset allocation. What's the move? Most analysts predict that 2025 will see more people increasing their stock holdings and trimming back on bonds and cash positions. 14. Artificial intelligence, overhyped or revolutionary. There's a split between financial institutions on the impact of AI. About half of those surveyed think AI is going to bring revolutionary changes, while the other half thinks it's being overhyped. So it's a bit of a mixed bag. 15. Trump's tariffs and trade wars. What's the impact? Finally, the big question: what impact will Trump's trade policies and tariffs have on global trade? The consensus is that they'll have a negative impact on global economic growth. Citi and JP Morgan both warn that high tariffs, especially on China, could make things worse for the global economy. Next today, we're diving into a headline from the Wall Street Journal about some serious security concerns in the US. The article, titled "New Orleans Attack Shows Renewed Risk of Terrorism Inside US," highlights two shocking events that happened on New Year's Day. You might remember I mentioned the New Orleans terror attack yesterday, but what's really catching people's attention is the explosion of a Tesla SUV outside the Trump Hotel in Las Vegas. Both incidents happened on the same day, so it's no wonder the US media is all over it. Now, the Wall Street Journal goes into some deeper details about these attacks, looking into who was behind them and whether there's any connection between the two. Let's start with the New Orleans attacker. His name is Jabori, born in 1982, and he's from Beaumont, Texas, which is about an hour away from Houston and not far from the Louisiana border. His family has lived in the East and South Texas area for years. According to court records, Jabori wasn't exactly a model citizen in his younger years. Back in 2002, he was caught stealing in Texas and got 9 months of probation. 3 years later, he was busted again for driving with a suspended license and ended up with another 6 months on probation. He eventually got married, had 2 daughters, and even joined the military. He tried to join the Navy in 2004 but bailed after just a month. 2 years later, he enlisted in the Army and served in Afghanistan for 11 months in 2009, though he didn't see any combat. After leaving the Army in 2015, Jabori faced 2 disciplinary actions for DUI offenses. At the time of the attack, Jabori was working as a senior consultant at Deloitte, making about $125,000 a year, which isn't bad for someone living in Texas. On the side, he also worked as a real estate agent. However, after a divorce in 2012, he had to pay child support and medical insurance for his kids, which drained most of his income. By 2020, he was struggling financially and divorced again. His take-home pay was only about $7,500 a month, but his expenses were nearly $9,000, so he was teetering on the edge of bankruptcy. The Wall Street Journal summed it up by noting that Jabbouri, once awarded a Global Anti-Terrorism Medal for his service, is now being labeled a terrorist by the US government. The second attacker, who caused the explosion near the Trump International Hotel in Las Vegas, is a guy named Matthew Liffersberg. He's a current Army service member, not a veteran, and has been in the military for 19 years. Unlike Jabbouri, Matthew has a clean record. His neighbors and colleagues speak highly of him, and everyone seems shocked by his actions. He's from Colorado, and at 37, he was well respected in the military community. His colleagues are completely baffled by his behavior. Now, why did the media initially tie these two incidents together? Both attackers rented their vehicles from the same platform, Turo. This is a popular car-sharing service in the US where regular people can rent out their personal vehicles for a bit of extra cash. It's not a traditional car rental service, and it's got a pretty unique business model. This connection led people to wonder if the two men were somehow linked, especially since Jabbouri had an ISIS flag in his car and was a known Islamic follower, while Matthew had no such background. However, the FBI quickly figured out there was no connection between the two, despite the same car-sharing service being involved. Interestingly, Trump initially linked Jabbouri's actions in New Orleans to illegal immigration, since he looked like he might be an immigrant and practiced Islam. But as it turns out, Jabbouri was actually born in the US, so that theory didn't hold water. What stands out here is that both of these men had military backgrounds, but no immigration ties. This adds a layer of concern and deeper reflection on the state of security in the US, especially considering the rise of homegrown terrorism. These events are raising some serious questions about how security is handled in America moving forward. Thirdly, let's talk about a big story from Bloomberg today. The headline? Tesla's annual EV sales drop for first time in over a decade. Yep, you heard that right. Tesla's sales in 2024 were actually lower than in 2023. That's a first in over 10 years. Here's the scoop. Tesla announced on Thursday that they sold 1.79 million cars last year, which was slightly less than what they delivered in 2023 and below what analysts had been predicting. Even though Tesla had a record-breaking fourth quarter for deliveries, it wasn't enough to save the year from an overall decline. After the report dropped, Tesla's stock took about a 5% hit. But let's not forget, over the whole of 2024, Tesla's stock was actually up 63%, and a big part of that surge came after Trump's election win. Elon Musk, during Tesla's annual earnings call, was still optimistic about 2025. He told investors that the company expects to grow by 20% to 30% next year. Musk is betting big on two things: the launch of a more affordable Tesla model and wider adoption of their self-driving software. He's confident these will drive growth in 2025. The report also gave a nod to Tesla's competitor, China's BYD, which saw its sales continue to rise. Now, here's my take: EVs are still in their early days and overall, the market is growing. So, the fact that Tesla's sales in 2024 dropped below 2023 levels? That's a pretty big deal. If you're a Tesla investor, this should definitely be on your radar, even if Musk has some exciting plans for the future. A beautiful roadmap is one thing, but turning it into results is another. That's all for today. Thanks so much for watching. If you found this video helpful, don't forget to hit the like button and subscribe for more updates. I look forward to seeing you in the next one.